Welcome back to Investing Talk Podcast.
Today we're looking at Robinhood.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Okay, so if we're going to start with the financials, you really have to look at Q3 2025. I mean, the numbers tell a pretty powerful story of a transition.
Really?
Okay?
A transition? What do you mean by that?
I mean, we're talking net revenues hitting $1.27 billion.
Okay.
And net income landing at a really solid $556 million.
Yeah.
But, it's not just the size of the number, it's the velocity.
Right, the momentum.
Exactly.
Yeah.
Q2 revenue growth was already up 45% year over year, and Q3 just kept that going. It signals they're moving past that early growth at all costs phase.
And I think that velocity you mentioned it's critical because it leads right into the profitability story. They've actually achieved sustained profitability now. And the net margin for the trailing 12 months is sitting at, what, around 52%?
52%, which is massive.
Yeah, massive. So when you look at the big established brokerage houses, what makes that 52% margin so defensible for a pure fintech platform like this one?
That's where the business model just shines. I mean, that margin is possible because they operate on very little traditional infrastructure.
Right, no branches.
No branches, no massive legacy tech stacks like a Quab or Interactive Brokers might have. They're a hybrid model, payment for order flow and interest income. So their cost structure is just minimal in comparison. That 52%, frankly, it's unprecedented in this space.
And the real proof of that efficiency is the operating leverage, which is finally kicking in. This feels like the key takeaway for any long-term investor here.
It absolutely is. Operating leverage is the sign that a company is truly maturing.
So can you walk us through those numbers again?
Sure. So adjusted EBITDA, which is a key measure of cash generation, it grew between 82 and 90% year over year.
82 to 90.
Okay. Now compare that to their operating expense growth, which is only 6 to 21%.
That gap is everything.
That gap is the inflection point. They scaled their platform a while ago, and now any new revenue just falls almost straight to the bottom line. They don't have to hire hundreds more people to support the volume.
Right. They've hit escape velocity on their fixed costs. But that leverage only works if they keep scaling the asset base. And those numbers are huge. Total platform assets are now at, what, $343 billion as of Q3?
$343 billion. Up 115% year over year.
Okay, but here's the critical question. How much of that 115% is just the market rising versus genuine customer trust?
That's a fair challenge. And while the bull market definitely helps, the real health metric to watch is net deposits.
New money coming in.
It's exactly. New funds actively flowing onto the platform. And they grew at an annualized rate of 29% in Q3. That growth is the foundation. It's proof the brand is still attracting money, even from, bigger accounts.
Yeah.
It moves us past that old narrative that this is just a trading playground.
And all of this is sitting on top of what the street calls their fortress balance sheet. They have very little traditional debt, and they're sitting on a huge pile of cash.
Something like $4.2 billion as of Q2. That's not just a cushion, that's dry powder for strategic moves.
Which is the perfect pivot because we have to talk about how they're actually generating all this revenue. The picture is a lot more diversified now than it was a couple of years ago.
Oh, completely.
That's right. Transaction-based revenue is still the engine, but it's not just about stocks anymore. It's being led by options and crypto.
And those two segments are accelerating like crazy. Crypto revenues doubled in Q1 and Q2.
Oh.
And options trading, which has always been a cash cow for them, grew 56% in Q1 and another 46% in Q2. It's a fantastic hedge to have both of those.
A hedge in what way?
Well, if crypto volume drops, market volatility often picks up, which drives options trading, and vice versa. They feed off each other in a way.
Okay, that makes sense. And speaking of diversification, we have to talk about net interest income, NII. Transaction revenue is flashy, but NII is the stable backbone.
It's the bedrock. And it grew 25% year over year in Q2.
So just for everyone listening, how exactly do they generate that NII, and why is that 25% growth so important right now?
So NII is basically the interest they earn on your cash that's just sitting there. Cash sweep accounts, margin lending. That sort of thing.
Right.
When rates are high, they collect a big spread between what they pay you, which is often very little, and what they earn putting that cash into safe things like treasury bills. The 25% growth shows they're just getting much better at monetizing their growing deposit base.
And that ties directly into getting users to be more sticky, right? Which brings us to Robinhood Gold.
Yes. The key recurring revenue stream. Subscribers hit a record 3.5 million in Q2.
And the growth rate on that was what?
Up a staggering 76% year over year. That's revenue that isn't dependent on what the market does day to day.
And all that trickles down to average revenue per user, ARPU. That's up to, what, $151 now?
151 in Q2, up 34% year over year.
Yeah.
Now, that's still lower than some of the big incumbents, but the growth rate shows they are closing that gap fast.
This focus on maximizing user value, it leads us right into this innovation moat idea. The CEO called the launch of tokenization the, quote, biggest innovation the industry has seen in the past decade. That's a huge claim.
It's a massive claim.
So for listeners who aren't deep in the blockchain world, what is this tokenization play?
It's potentially transformative. Tokenization just means converting ownership of an asset into a digital token on a blockchain. But for Robinhood, this is way beyond just trading crypto.
Okay.
It means they're building the infrastructure to potentially fractionalize illiquid assets. Think a piece of a skyscraper or a stake in a private equity fund.
And make them instantly tradable.
Instantly tradable, 247, globally, with no traditional intermediaries. If they pull this off, they go from being just a brokerage app to being, well, critical financial infrastructure.
That is a fundamental shift in their ambition.
Yeah.
And it's being backed up by some very strategic acquisitions. We've seen two big ones, Trade PMR and Bitstamp.
Bitstamp is the immediate game changer. It gives them instant, established regulatory licenses in key European markets.
Which would take years to build organically.
Years. This accelerates their international expansion overnight. It lets them challenge players like Coinbase or Binance on their own turf, but with a compliance history of a legacy European exchange.
And Trade TMR is interesting because it's for the other end of the market, right? The higher net worth investors.
Exactly. It expands their wealth management capabilities so they can keep those users who started small, grew their portfolios, and now need more sophisticated advice.
And on top of all that, management is putting its money where its mouth is. They've ramped up share repurchases with an authorization of $1.5 billion.
That's a powerful signal. When a company with this much free cash flow is buying its own stock, it shows they believe it's undervalued.
All right, let's shift to the near term. What could drive the stock over the next, say, 3 months? The first thing that comes to mind is obviously the Q4 earnings release.
Right, that's expected in late January or early February. And the market has high expectations for continued growth. People will be looking very closely at the bottom line impact from Bitstamp and Trade PMR.
They want to see that those acquisitions are paying off immediately.
Almost immediately, yes.
And outside of company news, there's a lot of institutional activity that could cause some volatility.
Yeah, you've got the ETF rebalancing window through the end of the year and into January. And then in February, we get the 13F filings.
Which is when the big funds have to disclose their positions.
Exactly. And if we see that major funds have been buying in heavily after these strong results, that's going to provide some serious support for the stock price.
And what about the more speculative stuff, the narratives that could drive momentum?
Well, the whispers about accelerated international expansion using Bitstamp are everywhere. And there's persistent chatter about them debuting some advanced AI-driven investment tools in early 2026. Maybe a personalized AI advisor or something.
Okay, so that's the massive bull case. But for a balanced view, we have to talk about the risks. The big one that's always hanging over this space is regulation.
Absolutely. The business, especially crypto and payment for order flow, is just very sensitive to regulatory shifts. But again, that Bitstamp acquisition was a brilliant mitigating move.
How so?
Bitstamp comes with a long history of compliance. It has all these international licenses. It gives them a much more defensive posture. It wasn't just a growth play. It was a stability play.
Now, here's where we get a really interesting contradiction in the data. On one hand, the company is buying back its own stock. Institutions are buying in. But on the other, we saw significant insider selling in November.
Right. From executives, directors, the Baijiu Living Trust.
So how do you square that circle? The company is buying, but the insiders are selling.
It's a crucial point. It's important to remember that most of these sales happen through prearranged 10b5-1 plans.
Meaning they were scheduled months in advance.
Months in advance, yeah. When the insider doesn't have any non-public information, so while the volume looks high, it's often for personal reasons like diversification. It's less of a direct signal about the company's future, but You still have to watch it closely.
It creates tension in the story.
It does, absolutely.
Okay, what's another major risk?
The other one is tied to that strong net interest income we talked about. It's super sensitive to interest rate moves. If the Fed starts slashing rates, that 25% NII growth it could evaporate pretty quickly.
But doesn't the revenue mix provide a bit of a hedge there?
It does. That's the beauty of it. The faster growing parts, options and crypto, are way less rate sensitive. In fact, lower rates often lead to more market volatility.
Which drives more trading in those segments.
Exactly. It cushions the blow from any drop in NII. It's a really well-balanced revenue composition.
And finally, of course, there's just fierce competition.
Always. But their brand recognition with younger users is still a massive, massive asset.
So looking at the technicals, what is the chart telling us?
The market seems to be confirming the bullish story. The stock is in a strong trend, consistently trading above its 50-day and 200-day moving averages. That suggests institutional money is flowing in and staying put.
And the consensus trading range for the next 3 months seems to be somewhere between, say, $110 and $145, with strong support holding above that 110 mark.
So when you put it all together, the investment thesis seems pretty solid. The core argument is that the company is at a genuine operating leverage inflection point. Their earnings growth is just rapidly outpacing their revenue growth.
And that's what drives a re-rating of the stock's multiple. It changes the story from an unproven concept to a profitable compounding growth engine. It makes Robinhood a really compelling long-term fintech play.
It does, provided you keep a very close eye on that insider selling signal and, of course, the never-ending dance with regulators.
So I guess the ultimate question for you, the listener, is this. Will their huge ambitions in tokenization actually transform them into the core financial infrastructure of the next decade? Or will regulatory risk always put a ceiling on that potential?
That is exactly what we'll be watching next quarter. Make sure you hit that subscribe button if you haven't already so you don't miss our next analysis into the market.